Good morning, I'm Kim Abril, the founder and portfolio manager of Global Quality Fund. And today I want to talk about the main attributes of our portfolio of shares. So for this video, I introduce the recurring revenue concept. What means recurring revenue? So for us, recurring revenue is predictable revenue that has to comply with three characteristics. The first one is to be in a regular intervals. The second one is to have a high level of certainty. And the third one, but sometimes the customer has the obligation to continue to buy the product or the services. Most of the people think that this type of companies are only possible in business related to software as a cloud or SaaS business. But in general, this business can be found in all sectors of the economy. Is it true to think that in cyclical business like energy, commodities, airlines, and cars, is it more difficult to find high recurring revenue? This is the reason because our funds are not investing in cyclical business. So what are the characteristics or advantage of recurring revenue business? The first one is a recurring revenue business increase the value of the company in the stock exchange. So is it better to have a constant future cash flow that has a cyclical future cash flow? Second one is recurring revenue business increase the value of your customer, because this kind of companies, they should be a high retention rate. So these companies, if a company had 10 customers for the last year, it should be reason to think that for the next year, they can maintain 5 customers. So retention rate is 90%. So the company don't need to stay continually stimulating the demand, right? So a high recurring revenue business should be a profitable business, and you can use the metric ROIC. So these businesses are business with a high ROIC, right? Why? Because these businesses are asset light, they have negative or low working capital, and the cash conversion day is short. Also, this business, the last advantage, are reducing the sensitivity to business cycle or economic cycle. So where we look for recurring revenue? So when we think in recurring revenue, we think in a pyramid of 5 levels. The bottom one is recurring daily consumables. Consumables are things that we should to buy every day or every week or every month. For example, poultry. LDC is the leader in French poultry, and all the people should to go to supermarket to buy poultry twice a week, for example. Or people goes to a pharmacy once a week. Or when people goes ill, sometimes goes to a hospital one a month. So this is daily consumables. Second level is an industrial one, but it's not a level where companies are selling a product or a machine. They are selling, or they are in the services business. So they are in the business of maintenance, repair, evaluation, test, and certification. Later, we can see some examples of this level. The intermediate level is a network effect, a platform. Platform is a business where a company can join suppliers and users. So here, you can find different examples here in the pyramid, but this business is not typical to have all the recurring revenue for the business. Maybe they have in some percentage of the revenue, they have recurring business. Next level is subscription business. This is the most typical. So you can think about Microsoft or the other kind of business, but you pay in advance for a services, no? In this case, Office 365. And here, the typical characteristics for this business is, if you look at the balance sheet, this is business with a high deferred revenue. Deferred revenue is a liability metric in business where the customer pays in advance. So sometimes investors or people ask us for how do you find or how do you reach business across all the business that you can invest for the fund. First, we should to reach this business to talk with people and fund managers across, especially in US, but we have some screens, and one of these screens is a metric or a ratio that we try to search for a high deferred revenue as percentage of total assets and market cap. We look for numbers higher than 30 and 40%. So the last level is a company with a long-term contracts. For example, a company with a 3, 5, 10, or 15 years contract signed, right? You can find different examples. The French IT small companies like Neurones, Infotel, the Canadian one, Calian, or Inchcape, the British one. So let me start with some examples. LDC, this is one of our main companies in our fund. I talk too much about this company. So market cap for this company is 1,500 million euros. And this company essentially is selling recurring products in the poultry business. So this is product that we buy in a regular form. And this business are not cyclical business. This is the leader in France. They have to 40 to 50% market cap in the poultry business. Poultry is the meat that has the highest frequency consumption ahead of pork, beef, or lamb, and also is the most healthy. So here, when I show you the examples, I want to show you two metrics. Gross profit, because in my understanding, gross profit is a measure of pricing power. Pricing power is the ability of a company to increase prices above inflation without affecting revenue and without losing existing customers, so without decreasing retention rate. So if you look the last 20 years of gross profit for LDC, where you can see is recurring revenue. So each year, this company is able to increase the gross profit for a small size, but is it increasing? And also, if you look the operating margin, you can see a range from 3.5 to 5.5. And the reason is raw material. When raw material is growing, the operating margin of LDC go to the bottom, like 3% to 3.5%, sorry. And when the raw material is decreasing, the operating margin is increasing to 5%. So this is the kind of company that we are searching for our fund. Second level, industrial business. I want to show you an example with Gerrard Perrier. Gerrard Perrier is another one French company. This is a micro-cap company with a market cap with 174 million euros. But Gerrard Perrier is not selling any product or any machine. So Gerrard Perrier is in the business of maintains electrical and electronic equipment. He's one of the leaders in France. And this is an amazing company. This is a boring company, a stable company, the typical value company that all the people is searching. When you look the gross profit across the last 20 years, what you can see is a continuing increasing gross profit. So a continuing increase in pricing power. And also when you look the operating margins, the range is so small. Is it moving from 8% to 10% across the different level of retention across the year? So we have across, I think the wage of our fund for this company is across 4% of total assets. We started to invest in this company in 2017, and this is a long-term structural stock position for our fund. Well, right now, Gerrard Perrier is really cheap. So this is a value company growing 10%. So I encourage all the people to try to research this company. Next level is a platform. And our example is Frondor. Frondor is a US company. This is a spin-off from at the end of 2018. I try to remember. Market cap for Frondor is 2,700. This is a network effect. This is a platform. So the business model of Frondor is try to join in the same platform homeowners and local technicians or professionals in US. Frondor is working now today with more than 45,000 professionals, and this platform try to join and solve the problem of homeowners with appliances. Okay, so this platform join homeowners and technicians to try to solve problem with appliance in exchange for a monthly, quarterly, or annual subscription. So millennials in US, they used to use this kind of platforms to try to solve problems with home appliance. This is not common in Europe to use this business. This is the reason because Frondor it's only focused in US, and is it expanding across all the country and all the channels, because Frondor is working in the new sales homes and also in the second hand. So when you look at the gross profit here, you only have 5 years, but you can see the same trend, right? Microsoft. So the next level, remember, is subscription business. The typical example here is Microsoft with Microsoft Office 365. So remember that in 2014, Microsoft was start to transiting from a license sales business model to a subscription one, no, a cloud one. And Satya Nadella, sorry, the CEO, this is the reason for this change. So remember that the main product of Microsoft right now is Office 365. I'm a user, so I'm really happy with this product. So you pay in advance $150 for receive the service and has access to Office 365. So you can connect all your sheets and all your documents in different computers and in different ways across the wall. So you can have your computer in your office, then your other computer or your portátil in your home. Remember also that Microsoft has Azure that is going to match, but when you look again, our favorite metric, gross profit, where you can see is the same. So gross profit, is it increasing year by year in the case of Microsoft? Here you have the one line, which is the blue line, that is it growing in the same way of growing the gross profit. This is an earned revenue or the federal revenue in terms of total value. And look how the federal revenue was growing year by year. So this is the kind of business that we are looking. So the last level in the pyramid, remember, is long-term contract. Sorry. One example is Neurones. Neurones is a French IT company that signed contracts. Here, the typical duration for the contracts is a range of 3 to 5. And Neurones reach contract with, for example, tier 1 companies in France, for example, Michelin. And Michelin is it outsourcing the informatic infrastructure to Neurones, and Neurones works this informatic infrastructure for 3 to 5 years. So Neurones is an 80% recurring revenue business with a high customer retention, higher than 90%. And in this case, with a cost base that 70% is variable, so they can adjust the cost to the down. So right now, in this coronavirus crisis, Neurones that has a variable cost, they can reduce his cost to try to maintain his margins, but also his operating margins are really stable. When you look again the gross profit and operating margins, you can see the same that we are saying in the last 4 examples. So boring company with gross profit growing year by year, with top line growing 5% organic and sometimes adding something 1-2% in organic. Look, the operating margin is moving from 8% to 10%, and the reason is if in any of these years the company is increasing subcontracting, or maybe his customers are reducing or are increasing a little bit the IT expense. So last example is a business that is not a recurring revenue business. So these are ArcelorMittal. All the people know ArcelorMittal. This is a big company, 8,700 million. This is a clear cyclical business linked to steel production. This is the typical business that we never invest. And the reason, because we are never investing in cyclical business, is the chart. If you look at the chart, try to reach a pattern or trend for gross profit. Is it impossible? So gross profit and operating margins are totally erratic. So as an analyst or as a fund manager, I cannot try to model the revenue or the net income or the cash flow for the next 3 to 5 years. That's impossible. So this company has only visibility for the next month. So this is the typical business that you never find in our fund. So our fund only invests in high recurring revenue business. So right now, our percentage of companies for our total portfolio of high recurring revenue, it's 82%. So our work day by day is try to search for companies to increase this percentage to 100%, but this is not easy because all the people knows that these are the companies that they have the most value. So you should to trade with premium related to the market. So it's not easy, but we want to try to increase this percentage. So maybe if the market start to continue to go down, maybe you have the opportunity to increase this percentage. I want to talk this about maybe in next videos, but this 82% of recurring revenue business, typically we can find in IT business and pharma business and consumer staple business. So if you want to follow and you want to ask questions to me about the fund and about the ideas or the attributes of the business or the business cycle, so please feel free to send me email or go to the web page. And also, I want to show you that we have created a YouTube channel. The YouTube name channel is Global Quality Fund, who is the name of the fund. And if you go inside, you can see 3 reproduction list. Okay, one is in English, the other one is in Spanish. So here you can find videos related to how it's your vision about the business cycle and how we protect the portfolio. We can talk also about investment thesis and about forensic thesis, because we have a really focus in accounting red flags. And also we can find a video like this one to talk about different attributes about our portfolio of shares. So, well, this is all for today. So have a good day and I see you in the next video.